I'm going to walk you through the strategy behind a trade that made me $1,718. You can use this strategy to find profitability as a forex trader and hopefully get funded. So in this video, you'll learn the timeframes I used to take this trade, how I entered this trade and where I placed my stop loss, and most importantly, why this trade was high probability. Just before we get into the trade and before I break it down, if you want to see proof of this trade, proof of the profits that I made on this trade, head over to my X Twitter account via the link in the description, and you can see a post that I made about this trade with proof that I actually took this setup. So the first thing behind the process of this trade, why I actually took this setup, the first thing that I am doing is I needed to understand which direction the daily time frame is trending. Is the daily market structure bullish or bearish? That is the first thing I need to understand. So looking at the charts, what I'm focusing on with my particular strategy and the process behind this setup is I'm focusing on the current market structure. So I'm not worried about past price action. I'm focusing on what the daily time frame, what the daily market structure is currently doing. So I'm not looking at past price action. I'm looking at the most recent current market structure on the daily time frame. And in this example, what I could see was the daily making swing lower lows, swing lower highs, and new swing lower lows. So the daily time frame, the daily market structure was indicating to me that price is bearish, which means as part of my process, I want to be looking to sell. So the first thing I was doing here was using the daily time frame, reading the current market structure, the most recent swing points, to understand whether I'm buying or selling. And in this particular setup, the daily time frame was pushing to the downside, making new lower lows. So I now know, as part of my strategy, that I want to be selling on the 4-hour time frame. The 4-hour time frame is my entry time frame. So once I understood that the current daily market structure is pushing to the downside, making lower highs and lower lows, this confirms to me that the daily is pushing bearish. I then scale down to the 4-hour time frame to go through my next part of the process. So now knowing that the daily was bearish, what I then need to do as part of the next step in my trading strategy, part of my process, is I need to understand what the 4-hour time frame is doing. So I need to make sure that the 4-hour is aligned with the daily time frame. If the 4-hour time frame in this particular setup, or with any of my trades, if the 4-hour time frame isn't aligning with the daily market structure, so in this example bearish, then I need to wait. And that's completely normal. So we can see in this example that the current 4-hour market structure is pushing to the upside. We're making internal higher highs, higher lows, higher high, higher low, little higher low here. So this was the real area price expanded to push up to make a new higher high. And these are internal because they're below the current daily lower high. Their market structure breaks within the higher time frame swing points, but they're still breaks of structure. So at this particular point in time, when I was on the charts, I could see that the 4-hour time frame was bullish. So what I'm waiting for is the 4-hour time frame to then turn bearish, aligning with the daily market structure. Because as I said in the beginning there, the first part of my process is to identify the daily market structure, whether it's bullish or bearish. And in this example, it was bearish. I'm then scaling down to the 4-hour time frame to then make sure the 4-hour market structure aligns with the daily time frame. Okay, and again, this is bearish. So because the 4-hour market structure wasn't bearish, all I'm doing is simply waiting for price to shift. It took a couple of days in this example, but what we have here is a current 4H higher low that expanded to make a 4H higher high, which is internal structure, but this is still market structure. So I'm waiting for the most recent higher low on the 4-hour time frame to turn bearish or to be broken. So I'm basically just looking for the 4-hour time frame to go from bullish to bearish. And this is indicated by seeing the most recent bullish structural point, this higher low, being broken. So this was the area I was looking for structure to be broken to then indicate to me that the 4H has now turned bearish, aligning with the daily market structure, which we can see here. So what's happened is this most recent higher low that made the higher high was broken. The 4-hour market structure has now shifted bearish, which we can see here, which was indicated with a strong expansion, which is good. Because the 4-hour time frame is now shifted bearish, the market structure on the 4-hour now aligns with the daily time frame. I can move on to my last step, which is looking for my entry model. My entry model is made up of 3 simple entry confirmations, entry rules: breaker structure, strong momentum, and candle closure. And what we can see here is breaker structure, some form of structure to the left. And then, of course, we have the momentum, which I've just circled there and is highlighted in the orange rectangle. And we have a candle closing below the break of structure. And that candle closure basically confirms that the area of supply that I'm going to be entering from is validated. If price wicked below this structural break, it's not valid. And if you want to learn this entire strategy and all of the steps, process in detail so that you can potentially use it to find profitability and get funded, I've put together a free webinar breaking down this entire supply and demand strategy, which I personally used to get funded multiple 6 figures. Check out the link in the description and you can learn this entire strategy for free. So once I saw the entry model and the entry model has been confirmed, I then marked my area of supply. And how I marked my area of supply was literally just the area where that momentum came from. So that's how I'm marking my supply or demand zones. And supply in this example, I'm marking the original area where that momentum has come from. And in this example, this setup, it's this area here. So we can see that this candle is what started the momentum. So I want to include this whole area in my supply zone because this is where I'm going to be entering from. And so how I entered this trade is by using a sell limit. Once I saw that break of structure and I saw the candle close below the break of structure as part of my entry model, again, you can learn all of this by clicking the link in the description. I then knew that my entry model has been validated. I can now look to take my trade. The process has been laid out. I can take my setup. So what I then did was place my sell limit order from the bottom of supply, and how I'm placing my stop loss is just above the area of supply that I have marked. Because if price goes above this area, it's broken the original area where that momentum came from, which created the area of supply, which for me, as part of my strategy, it invalidates the supply zone. So I no longer want to be in this trade. And that's how I'm placing my stop losses on every single trade, whether it's demand or supply. It's slightly above. My stop loss is placed slightly above with an area of supply, or with demand, it's slightly below. Because if, like I've said, if price breaks this supply zone, it breaks out the top here, then the supply zone's invalidated. It's no longer valid. I want to be out the trade for a small loss. So sell limit set at the bottom supply, stop loss set safely at the top there, just out the way. And I'm currently trading a 2.25 risk to reward ratio. And that was it. So those were the 3 steps, the process behind this trade. I'm looking to identify the daily market structure trend. Once I've identified that, the current swing points on the daily, I'm then scaling down to the 4-hour. I then need to see the 4-hour aligning with the daily, and in this example, bearish. Once I've confirmed that the 4-hour market structure is bearish, all I'm then doing is moving on to the last step, waiting for my entry confirmation. I'm waiting for my set entry model, my entry process, my entry confirmation. So once I've seen that, entry model has been validated, I'm setting my sell limit in this example from the bottom of supply, stop loss just above supply, and then targeting my risk to reward ratio strategy. Once I got triggered in, price continued to stay a little bit in drawdown around here, and then we saw some momentum kick into the market and price hit my take profit. Again, if you do want to learn all the details behind this supply and demand strategy, my entry model, reading market structure, how I'm looking for buy examples as well, you can learn my entire strategy for free by clicking the link in the description. Thank you very much for watching, and I'll see you in the next one.